Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Friday, made it to the end of the week. And what a week it was. Another big sell-off in the markets. What do we got going on today? Well, today we're kind of flat. The Dow Jones is down about 100 and the Nasdaq's up about 100. Nothing serious yet, but we might get some volatility towards the end of the day. We got options expiring today. Now, why am I saying that the markets are going to have this big rally coming? Now look, we've dropped 33% in the Nasdaq, 23% in the S&P. We're getting ready for a big short covering rally. Now that's my opinion. Now it takes two sides to make a trade, right? There's a lot of people out there that would take the other side of that trade. They would say that this market is crashing and it's going much lower. Now why do I think it's going to have a short covering rally and a big short covering rally? Well, first of all, we got these gaps, right? We gap down, we gap down, we gap down, we gap down. These gaps are going to be filled. We're going to come back and fill those gaps. That's my opinion. Now, also, we made this new low this week. Now, if you look at the HYG, it's not making a new low. It is not. HYG is the junk bonds. Junk bonds are not making a new low. Junk bonds usually tell us what's happening ahead of time. I think that the bottom is in, or we're really close to the bottom. We'll see. Could we go a little bit lower? Absolutely, absolutely. But what am I doing? Well, I'm positioning myself. I'm positioning myself with the QQQs, the SPY, and even the Russell, the IWM. I've got some of that on. Now, here's what happened. All right, so we got the VIX. The VIX, we spiked way up. But this week, we didn't go make a new high. We made a new low on the Qs, a new low on the SPY, but the VIX did not make a new high. The VIX is actually telling us that we're getting ready to go up. We have a buy signal from the VIX. Now, how does that work? Anytime the VIX gets outside of the upper Bollinger Band, right? Anyways, it comes back in on a closing basis. That is the time to put in a buy. This is just the way that I trade. Now, this is what I do. You, of course, got to do your own research, your own judgment, and make your own calls. But that's what I'm doing. That's why I'm buying the S&P. That's why I'm buying the QQQ. Now, also, if you look at the 200-week moving averages, okay, so the QQQ is right above the 200-week moving average. SPY right above the 200-week moving average. They could come down a little bit and touch it, but this is where you're going to get that bounce. You're going to get that short cover and rally. Now, the reason I bought the IWM today is because the Russell has actually dropped below its 200-day moving average. I think all three of these are going to bounce higher in a big short covering rally. Once again, this is the way I'm playing it. Of course, you got to do your own research. You got to make your own calls, and that's just telling you what I'm doing, and I'm giving you the reasons for what I'm doing. All right, let's move on to the real estate market. I do find it fascinating. Now, we got the home builders. Okay, the home builders, I'm very worried for these home builders. Let's talk about that a little bit. All right, so we got Toll Brothers. We got Lennar. Now, Toll Brothers was trading, $75, $80. Now, today you can get it at $40. That's a half off sale, in my opinion. All right, Lennar was at $120. Today you can get it, low 60s. Once again, a half off sale. The home builders are having a half off sale in the stock market. Now, how long will it be till the home builders are having the half off sale on their new homes? Well, let's talk about this a little bit. All right, so they are building homes at record pace, right? And they can't stop. Once you get the permits, once you start the building process, you got to finish the homes because they have financing on these homes. And they don't have a 30-year loan on these homes. They have actually short-term financing. Okay, so they have to finish these homes. They have to get rid of it so they can pay off their loan. There's over 1 million of these homes being built in the United States right now. Now, usually when new homes are built, people put deposits down. They buy the home. They put the deposit down on the home and they go, I want that one. And then the builders, they're building the homes in these subdivisions. All right. Well, what's happened now? Well, a lot of these people that have had their deposits down on these homes, well, they back out. They pull back. They say, no, I don't want anymore. And they can get out. Why? Because they can't afford it anymore. Interest rates when the home builders planned these houses were at 3%. Now the mortgages are at 6%. This knocks a lot of affordability out for a lot of people. Let's think about this. All right, let's say you were a home builder and you're selling $1 million home. All right. Now at $1 million home at 3%, you have buyers. But at 6%, those buyers can only afford a $500,000 home. But you're looking, but I got all these $1 million homes that I just built. Who do I sell them to? Well, there's no buyers because of the affordability. Do you have to come down half off? Well, maybe you don't need to come down all that way, but eventually I bet you will, because you have to get them sold. You have to get them sold, well, relatively quickly. You have short-term financing on these homes, right? Okay, so, well, now how are the home sales doing for new homes? New homes are down 26% on volume year over year. And these new homes keep coming onto the market. They're coming onto the market. And they're coming on with price reductions. Now, home builders hate to reduce that. I mean, they'll do anything not to reduce. They'll upgrade you to the marble. They'll put in new appliances for you. They don't want to reduce that price. They'll give you a low interest rate loan, but they can't really do that because that hurts their profit margin. So you're getting a lot of these home builders getting really nervous. Now, what about the people that just bought the new homes? Well, a lot of them, I believe, have buyer's remorse already. Look, if you just bought $1 million home and you in the subdivision, let's say you were one of the first to buy in the subdivision. Subdivisions get built out in phases. There's phases to building out the subdivision. You bought at the $1 million level. Now, the new homes that are being finished, maybe they're at $900,000. Maybe they dropped to $800,000. Don't you have a little bit of buyer's remorse? I would have quite a bit of buyer's remorse, but that's just what I would do. Maybe you like overpaying for stuff. I'm joking there. But okay, so anyways, that's what's going on with the home builders. They're having a half price sale right now in the stocks, and I think the half price sale is soon coming to the homes themselves. Now, I was having an interesting conversation with my good friend Bob, not to be confused with Billy Bob. This guy's name is a real person, and his real name is Bob, and he recommends people to me. We've done some business in the past, but he asked me, we were talking about, stock market, just general stuff, and he was complaining about his financial advisor. His financial advisor that he pays a lot of money to, well, he's down 30% on his stock portfolio. Now, he's not too happy about that, but he goes, well, Mike, at least my houses are up, right? And, he kind of asked it like a question. I'm like, Bob, don't ask me that question unless you really want the answer. He goes, no, I really want the answer. Now, he has one home here in Cupertino, which is the Bay Area, and then he's got his home in Lake Tahoe. And the home in Lake Tahoe he uses when he goes skiing or when he goes up to the lake. I love Lake Tahoe. Lake Tahoe is great. But anyways, he Airbnbs that home, and then when he bought it, probably 6 years ago, well before the pandemic, and well, he paid $700,000 for it. And I asked him, I go, well, what do you think that'd sell for right now? Zillow's got us at $1.5 million. And I go, well, do you think it's going to stay at $1.5 million? Oh yeah, Lake Tahoe is underpriced right now. Now, I love Lake Tahoe. I spend some time there. It's a little getaway for a lot of people in the Bay Area. We drive up there. Now, back in the 80s, now I'm an old guy, but back in the 80s, I used to go up there with my buddies, and there was this hotel on North Shore, right? It was called the Kelneven. Now, in the 80s, they had this problem with the savings and loans. The savings and loans were the ones that made the loans on real estate, and those loans went bad. So the government took back a lot of these properties that had these bad loans. They bailed out as a savings and loan bailout back then. That's what it was, and they put them in this trust, and they were sold sold out of trust and out of bankruptcy trust. And there was this property up there called the Kel Neva. Now, the Kel Neva was a big casino, a little high-rise casino, had about, I'm going to guess about 200 rooms. But the casino and the 200 rooms was coming out of bankruptcy at the time for a total of $4 million. Now, this is on North Shore in Tahoe, if you know what that is. $4 million. Now, this goes back to the 80s where $4 million meant something, but I tried to get my friends together so that we could go buy the Kel Neva. Well, I couldn't get enough interest. I was a young kid in my 20s. I was motivated, but a lot of my friends, I didn't know a lot of rich people back then, and there was no internet to do the crowdfunding so I could get the money to buy the Kel Neva. But anyways, $4 million for this big high-rise casino with 200 rooms, right? Overlooking the lake. Each room you could overlook the lake out there, right? Well, right now, to have a house, just the average house overlooking the lake, you're going to be paying that $4 million. I think Lake Tahoe is overpriced. I think it's going to come down. I think it's going to come down because it's second homes. It's not main homes. What propels Lake Tahoe's prices are the second home prices. And a lot of people that get in trouble in the stock market, get in trouble with Bitcoin, well, they sell off their second home before they sell off their first home. Now, Bob, he's a wealthy guy. He's not going to get in any trouble, but he's expecting his homes to stay up. I'm going, Bob, I don't think they're going to. I think they're going to come down about 50%. He's like, oh my God, that's impossible, Mike. There is no way that could happen. There's no way it could happen in the Bay Area. There's no way it could happen in Lake Tahoe. Now, once again, that's his opinion and he's entitled to it, but I have a completely different opinion. And it was just a fascinating conversation that, a lot of my friends, they don't like what I have to say. And that's why I got you guys to talk to. Now, if I didn't have you guys to talk to, I'd be out there talking to my friends and I'd be losing a lot of friends. But you guys are interested in this stuff, and that's why you're going to give me the thumbs up today, because it's Friday, everybody. Get out there. Have a great weekend. Beautiful weekend. It's summertime. I'll talk to you all next week. Thumbs up. Hit the subscribe button. Bye-bye now.